Hey everyone, welcome to the channel, wherever you're watching from. Hope you're having a great week, a great day. And in today's video, I want to go over this video right here. It's called Bitcoin is a Brilliant Scam and I Can Prove It. So we'll go over it and see what it's about. And stick around because I want to show you a cool Bitcoin projection tool that I created using AI. And it's a very useful tool that shows you what will be your return. You can add all kind of variables here. So stick around and we'll go over that too. So let's go over this video here and see what he has to say and maybe refute some points here.
That's right. The #1 crypto hater on YouTube has returned, and for those of you who don't know me, about 6 months ago, I made a video breaking down how MicroStrategy had essentially turned itself into a giant leveraged bet on Bitcoin. My argument was simple. Michael Saylor had turned MicroStrategy from a dying software company into a leveraged time bomb, and that the whole thing only worked if Bitcoin's price kept going up forever.
Pay attention to the language. A time bomb. This is very sneaky because he doesn't really know that. Okay, so he's speculating.
And at the time, this was a pretty unpopular take. The general consensus in the comments was that I didn't understand what Michael Saylor was building, that this video was going to age poorly, and that I was apparently a dumbass. But I'll have you know that since I made that video, MicroStrategy has lost nearly $100 billion in market cap, and their stock price is down more than 50%.
Right, because Bitcoin has something called bear cycles. And not only Bitcoin, even the S&P 500, the whole market has bear cycles where prices go down. And that's how markets work, essentially.
So then fast forward a few months after the MicroStrategy video, and I uploaded another crypto video. This time, it was about the broader crypto industry. It was about how the industry was much more fragile than people realized. And once again, this video was not exactly popular with the crypto community. And since that second video was published, the global cryptocurrency market has lost well over $1 trillion in market value, and the total market is down over 30%.
And yeah, of course, the market is down 30% because crypto is not Bitcoin. Crypto is built from a lot of coins that people create to scam people. And people need to get burned a couple times sometimes to learn that. They buy a coin, a shit coin, and they expect to make money from it, and then they get rug pulled. And that's not Bitcoin. That's crypto. And crypto market and Bitcoin, two separate things.
But let me be clear, I'm not bringing this up to take some victory lap over the people who bullied me in the comments, even though I should be. I'm bringing this up to highlight the fact that both of these videos were built off of the same idea. The idea that underneath the narratives, parts of the crypto ecosystem are much more fragile than people are admitting, and that underneath all the narratives, there are real issues with the crypto industry. Which leads us to the obvious follow-up question, what about Bitcoin? And that's because Bitcoin isn't just another crypto project. It's the foundation the entire industry is built on. It's the bottom block in a very tall, very unstable game of Jenga. And that's what I'm going to be talking about today, because Bitcoin's price is driven by the same false narratives. Narratives that say Bitcoin is digital gold, that it's the future of money, and that it's a hedge against inflation and corruption. And if you've spent any time in the crypto industry, you've heard these same arguments 1,000 times. But here's the problem. When you actually start testing these narratives, when you stop looking at the story and start looking at the data, what you start to see is something very different. You start to see a pattern where the story keeps changing every time the technology fails to deliver on previous promises. But to understand Bitcoin's real value, we have to start with a much simpler question. What is Bitcoin actually supposed to do? And when Satoshi Nakamoto introduced Bitcoin in the original 2008 white paper, the idea was extremely clear. Bitcoin was described as a peer-to-peer electronic cash system. In other words, Bitcoin was supposed to function as digital money, a decentralized alternative to banks and governments where people could send payments directly to each other without intermediaries. And if Bitcoin actually accomplished this, it would have been revolutionary. But there's a problem. It didn't. It wasn't even close. Because economists generally define money using 3 basic criteria. First, it has to function as a medium of exchange. Basically, people need to widely accept it as a form of payment.
The reason people use dollars is because they are the legal tender. Okay, for example, in the USA, you can only use dollars as a medium of exchange. And some people use Bitcoin, but it's not widely adopted yet.
Second, it has to function as a store of value, something you can hold today and spend later without massive swings in purchasing power. And third, it has to function as a unit of account, meaning it must serve as a standard measure for pricing goods and services so it can allow people to compare their value. And when you start evaluating Bitcoin using these tests, it doesn't just fall short, it fails all of them. And I can prove it to you. Because as a medium of exchange, Bitcoin is slow, expensive, and inefficient. The Bitcoin network processes roughly 500,000 transactions per day, and if you think that sounds like a lot, it's
Well, today it's a lot more because of the Lightning Network, but it used to be slower. And as technology advances, so does Bitcoin. The dollar does not advance. The dollar gets printed out of thin air and it creates inflation, rising prices, and that is not what we want.
not. Because if you compare that to something like Visa, well, Visa processes roughly 65,000 transactions every single second, which means Bitcoin's entire daily transaction volume could be cleared by the Visa network in under 8 seconds.
Well, the comparison is a false comparison because Visa is not the payment. You don't send someone Visa as payment. It's just a credit card company that processes transactions. And of course, there's a lot more transactions with Visa because there's a lot more users there. With Bitcoin, you have maybe 2 3% of the whole population using Bitcoin. So, of course, Visa will have a lot more transactions. And Visa is not cash, Bitcoin is.
Up there, because a single Bitcoin transaction has a carbon footprint equivalent to roughly 1.5 million Visa transactions. And in terms of energy use, a single Bitcoin transaction consumes roughly the same amount of electricity as the average American household uses over 40.
Maybe before the Lightning Network. But today it's a lot more efficient and it's going to continue to be more and more efficient.
3 days, which explains why Bitcoin hasn't become a widely adopted payment system yet, because it isn't a good one. So, what about using Bitcoin as a store of value then? And at first glance, the argument seems reasonable. It has a fixed supply, and historically, assets with limited supply, like gold, have often been used as a store of value. And to that I say, no. And there's two reasons why. The first, stability. A store of value needs to reliably preserve purchasing power, and Bitcoin has historically been one of the most volatile assets in the world, which is exactly why you don't see anyone dumping their entire net worth into Bitcoin.
Why would anyone do that? Why would anyone that's a smart investor will dump all of their net worth into anything? Not only Bitcoin. Why would someone put all their net worth in gold or in stocks? That's not a smart move. So this point is irrelevant.
Because an asset that can swing 20% in a single month isn't reliable. That's a level of volatility where businesses, households, and individuals
Volatility is not a reason to not put all your net worth into something.
start to treat it as a speculative investment rather than a true store.
And yeah, it is volatile. Bitcoin is a volatile asset. I believe it's because it is a fairly new asset that the world hasn't adopted widely yet. And also, you can look at volatility as an opportunity, right? Because every 4 years, we have bear cycles, we have halvings, right? So every time the price goes down 20, 30, 50%, it's also an opportunity. So you can see it as speculative and dangerous and risky. And that is why you don't put all of your net worth into it. You put certain amount of money that you're willing to lose. That if it goes to zero, you're good. Nothing happens. So never put everything you have into one asset.
Of value. And the second issue that rarely gets discussed with Bitcoin, ownership. Because despite the narratives you read online about Bitcoin being decentralized, the actual distribution is extremely concentrated. Because roughly 2% of addresses control 95% of the supply.
I rather have that than a government that essentially controls all your money and can just print it whenever they want. They press a button and they print 2 trillion, 5 trillion, 10 trillion of cash, of money, of dollars. That doesn't make any sense. So I rather have 2% of addresses, according to what he's saying, control 95% of the supply, which is not true, but let's say it is true. I rather have that than a central government, a central bank that controls the interest rate, that controls the money supply, creates inflation, um, and soon they're going to ban um, transaction amounts in cash. There are some countries already that you cannot make any high transactions with cash. And one day will come where they will ban cash altogether. And the world is heading towards a digital future. Everything is digital nowadays. Not many people use cash anyways. So the way I see it is there will come a day where there will be no more cash, no more physical paper, which is useless anyway, by the way.
And when ownership is
The US dollar is backed by paper, basically, and you can use it for fire um, in the winter when you get cold. And that's the intrinsic value of the US dollar, of the paper, basically. You can't even do that with gold, right? You can't even use gold for fire if you wanted.
top-heavy, price movements can easily be manipulated by a relatively small group of large holders, like the recent Jane Street incident. Because right now, Jane Street is currently being sued for allegedly helping trigger the 2022 crypto winter and wiping out 40
And what you have right now, the system we have right now, is highly manipulated. Like I said, with the money printing, the quantitative easing, the Fed that controls all our money, a very manipulated system.
billion in market value. And the fact something like this is even possible isn't exactly the kind of foundation you want for a stable store of value. So, what about the third requirement, Bitcoin as a unit of account? Well, let's just say this one doesn't exactly knock it out of the park either. Because even businesses that accept Bitcoin as a form of payment don't actually price things in Bitcoin. They price everything in dollars and then convert the amount into Bitcoin.
Right, because right now we have the dollar as money. So of course everything will be priced in dollars. I believe there will come a day where everything will be priced in gold, maybe, because the dollar will be so useless. It has lost over 97% of its purchasing power since the Federal Reserve in 1913 was established and we got off the gold standard. There will come a day where the cash will be zero. That's where it's headed. And the government and the Federal Reserve aren't helping the situation because they keep printing and they keep inflating the economy with useless paper.
At the moment of payment. Which means Bitcoin isn't actually acting as an economic measurement, it's just temporarily passing through the transaction. And even after laying out the specific reasons why Bitcoin fails each of the three basic functions of money, I already know the response that's coming from the Bitcoin crowd.
Well, we haven't given it a fair shot yet.
And to that I say, well, we actually did. Because if you want to see what Bitcoin actually looks like when people try to use it as a real currency, you don't have to speculate anymore, because we already ran that experiment.
By the way, not people try to use it, a government tries to use it.
Because back in 2021, El Salvador became the first country in the world to adopt Bitcoin as legal tender. The government launched a national wallet called Chivo. They required businesses
to accept it as legal tender, right? So it's not that people were trying to use it and adopt it, is that a government tried to use it, tried to adopt it for the country and essentially forced everyone to use it. It's like, that's not what it's for. The people have to use it on their own. If they want to use it, they will use it. If they see the value in it, they will use it.
to accept it as a payment, and even gave every citizen $30 worth of free Bitcoin as an incentive for people to try it. It was finally time. This was Bitcoin's magnum opus moment, the moment where Bitcoin finally showed the world it could function as a real monetary system. And the results? Well, it was a huge failure. Because according to IMF data, Bitcoin accounted for less than 2% of El Salvador's remittances. So after years of government promotion, legal tender status, and even a monetary bribe, 98% of people still chose to send money internationally through a traditional.
Because most people are used to the old system. Most people think that they need a bank. Most people think that they need a bank, right? And they will keep using a bank because that's all they know. And mostly, people over 40, over 50, they're not going to start learning a new system. It's one of those things that take time. And cash, it took a long time for societies to adopt cash, thousands of years actually. In the beginning, they were using barter, they were using all kinds of rocks, metals, gold eventually. And until they realized that they need cash, they need something more liquid, something that they can pass hand to hand. And that's when they moved to cash. And that took thousands of years. And so Bitcoin is only what, 16, 17 years old. So I don't think that it's been around long enough to to be fully adopted.
Financial system, which is a huge deal.
Because when you start studying Bitcoin and you're starting to get into Bitcoin and learning what it actually is, then you understand that all the system you knew before is just old and it's just not efficient enough. For example, candles were a really great invention. People used it for light thousands of years until they got the electricity. And what happened? Nobody used candles for light anymore. So just like this, Bitcoin is an alternative to cash. So when the dollar will keep losing its value and goes to zero eventually, because that's where it's headed, then, only then, people are going to look for alternatives and start adopting it widely.
Because remittances were supposed to be Bitcoin's magical use case, that it would allow people to send money across borders without banks, fees, and without friction. And when people actually had the option to use Bitcoin to do so, nobody did it. And it gets worse. Because when the Chivo wallet launched, millions of people signed up immediately. But data from the National Bureau of Economic Research shows that 60% of users downloaded Chivo to cash the $30 bribe and never made another transaction on the app, meaning they just downloaded it for the free money and bounced. And fast forward to today, and reports show that 66%.
Well, yeah, if you give people free money, and not really explain what this technology is, of course people are just going to take the money and continue on with their lives. It's like with everything. Download this app and get a free something. People weren't ready for this kind of cash system yet.
Percent of El Salvador's population considers Bitcoin a failed project, and 77% believe that further public funds should not be used to support Bitcoin. Which brings us to the harsh reality of Bitcoin, because if it doesn't function well as a medium of exchange, it doesn't function well as a store of value, and it doesn't function well as a unit of account. Then we're left with a very obvious question: where does the value of Bitcoin actually come from? And the answer to this question lies at the foundation of Bitcoin, because once you strip away all the narratives, remove all the marketing, and ignore the memes, the only thing left is a very old concept in finance, something economists call the greater fool theory. And this theory says that the price of an asset doesn't necessarily have to be justified by its underlying value, as long as there's a greater fool willing to buy it from you later on for a higher price. And when you start to look at not only Bitcoin, but the entire crypto market through this lens, it becomes a lot more clear. Because Bitcoin doesn't generate cash flows like a stock does. It doesn't produce goods like a commodity. And in reality, it has pretty much no widespread utility. The price is entirely dependent on the belief that a greater fool will buy it later for more money. And that belief creates demand. And then that demand drives the price higher. And then the price going higher attracts more buyers. And the cycle repeats again and again. So every narrative you hear about Bitcoin serves a very specific purpose, whether it's the digital gold argument, the future of money argument, or the hedge against inflation argument. These stories are crafted to create new buyers. Because the moment new buyers stop entering the market, the entire machine breaks.
It's not about buyers. Like Bitcoin is it's about users. It's not a thing that Bitcoin doesn't need buyers. It needs users. Yes, people use it to trade it, people use it to, hold on to it and get rich, but it's a money system. It's a payment system. It's cash. Bitcoin is not a stock, right? And even stocks, you can hold it. You buy them in the hopes that they will go up, and then you want to cash them one day. Why do you buy a stock? You buy a stock because you believe in the project, you believe in the company, and same like Bitcoin, you believe that it will be something one day, so you buy it. You can hold it, you can send it. You can't send a stock to anyone. You can't send a meta stock to someone as a form of payment because it's a false comparison. Bitcoin is not a stock, it's a cash system. It is the cash itself.
And that's the uncomfortable reality of Bitcoin. It's entirely supported by hope, and its value comes from people believing someone else will buy it for a higher price later on. Because the truth is, it's not any of those narratives you hear online. It's just the largest real-time experiment in the greater fool theory the world has ever seen. And it might not be today, and it might not even be tomorrow, but eventually, you will run out of greater fools.
Eventually, you'll run out of dollars. Eventually, the dollar will go to zero, and then what? What kind of payment system are you going to use? Gold? Are you going to send um, gold coins to someone for payment? Are you going to go back 1,000 years and start using gold again? Because we tried that. That didn't work. Um, Seashells, we're going to try bartering with seashells or paying with seashells or barter. No, it has to be a digital system after cash. And Bitcoin is the system. Bitcoin is the network. There will only ever be 21 million Bitcoin, which makes it scarce. And that is why most people are going to use Bitcoin. So it's a pretty um, deceiving video, you know. It's doesn't really prove that Bitcoin won't be anything in the future. Maybe in El Salvador, people didn't really like the idea yet, but it doesn't mean it doesn't work, you know? The fact that we use cash right now doesn't mean that it works. Maybe it works to pay for stuff, with cash, or because the government can still print it out of thin air. Governments can still print the cash and just inflate our economies with useless paper. But Bitcoin is the only solution for cash because you can send it through borders effortlessly, and it's just the best form of payment that we have right now. So the next thing I want to show you here is this tool I created, and it's free to use. You can find the link in the description. And let's say I have 1 Bitcoin, for example, okay? And let's say I'm dollar cost averaging $100 a week, all right? And an annual growth rate, let's say we grow very conservatively 15% a year with Bitcoin. And let's look at 10 years ahead. This is our time horizon. And here we have a little summary. This is our value of 1 Bitcoin that we have. In 10 years, 15% annual growth, it's 381. It's projected to be in 10 years the Bitcoin price will be around this amount. And the DCA invested in 10 years will be 52,000 a week. And this is the DCA gain, will be 61,000 gain, 0.4 Bitcoins accumulated over 10 years because the price keeps rising, according to this tool. And we have the network ownership percentage here, how much we own. So if we own 1 Bitcoin out of 21 million, it will be 0.0000476%. And the ownership in 10 years, it also calculates that. It just simply adds what we've accumulated through the DCA strategy. So 1 plus this much. And it shows us here this orange line is if we only hold, and the green is adding the DCA. Okay, very, very convenient tool. Feel free to use it. Feel free to play around with it. Punch in some numbers and leave a comment. Let me know your thoughts on this tool, what we can change, what we can improve here. And I'm working on adding more features like the price history of Bitcoin over the years, and some of the monthly return history of Bitcoin. I'm going to add this as well. And feel free to use it. Link in the description. Let me know your thoughts on this tool. And if you're not following me on X, feel free to do so. I post every day, updates, insights. If you saw some value in this video, like the video, subscribe, and I'll see you in the next video. Peace.